Hey everyone, welcome to August 14th, 2025, Principal Profit Trader Coaching Call. Sorry, I was running about 20 minutes late there, so we are starting a few minutes late, but the benefit of doing a coaching call later in the day and even running a little bit late is that we can get closer to the end of the day where we can get that daily call close that we kind of need, right, in order for us to come in fresh with a neutral mindset and then make a decision. So I think the next thing I'm going to do is I'm going to share my screen. Okay. Okay. So I've just shared my screen. You can see the daily chart here. This is a Bybit chart. Now, I mentioned yesterday that we are approaching a double top, right? Where sellers could be active. That was yesterday, right? It's like when do you sell? We want to sell on strength. So if you have a portfolio and you took off, I took off half here at one point, or I think it was on the early July. You have to go back and see when the signal was. Example, we reloaded I think it was here we took off in early July or late July, and then we got in at the reload. But the point is that if you took off again here, I wouldn't fault you, like I said before, because this is a wide double top. Okay. And one of the things that you also could notice is that even though this price at this close, right, was slightly higher than this, and if we go just look at the CCI. In fact, let me just bump it up. Look at that, right? And then we go all the way over here and we compare that to this, right? So see how if we look at this price here, this price from here to here, let's get rid of this horizontal here. We'll use a trend line now. If we look at the price from here to here, right? Price generally over that time frame went up, right? Wouldn't you agree? Now, if we look at the price from the CCI from here to here, right? Price generally went down. So as price went up into that, that is a pretty wide, bearish divergence. So not only do you have this double top anyway, but now you have like, wow, the CCI momentum can't even get up to where it was to have that initiative activity. Because I'm going to actually discuss a little bit of the difference between initiative activity and responsive activity, right? Because in order to have, a balanced breakout pattern like we had here, you need initiative activity to the upside, right? So when you see a giant overshoot hook from the extremes like this, in the context of breaking a giant balance, actually, this was actually multi-years, right? You're going to want to see this way up here. Now, at the same time, you might say to yourself, well, wow, doesn't that mean that we're going to, have reverse right away? Well, not necessarily, because of the context. We broke up here, right? And then even though we had this hook from extremes, which you would need for a balanced breakout pattern, the next couple of days, like I said, we had time frame alignment. Go long, go long, go long. Here, go long, and then up to here, then the close happens, and then you finally get that selling tail, right? That's the candlestick pattern on your daily call system, right? That's when stuff, oh, wow, okay, this is our first bearish candlestick pattern, right? Now things can at least go sideways, right? We're at the very least, if we revisited this balanced breakout spot back here, even these lower support bands, buyers will be active, but now we're going to have not initiative activity. What you see to the upside now with this selling tail, even though that's just one part of the puzzle, is not initiative activity, but what you see is responsive selling, right? Not initiative selling. This was initiative buying. This is initiative selling, right? That means you're selling because price has moved too fast, too soon, and you think it's lost temporary intrinsic value, right? So now, what do markets do when they show signs of that? Well, the main purpose of market is to facilitate trade. That's to go sideways. So you can at least say, well, that doesn't mean now we're going to go all the way back down to 82. But it's like now we could at least go sideways and touch this bounce breakout, or at least come back here to these lower bands of these former breakout spots of this launching point of directional conviction. And that's what we did, right? First time we came back here, that was a long, right? Now we're going in a sideways phase. That means the larger time frame bias shifts. I can go long and short, which I did for a while. Then we get a huge move down. In fact, when I saw this, I warned everyone in late July to take half off their portfolio. And then I also told people to take go all in on their portfolio again, move your stop to break even, whatever. And I also gave signals for SUI, which I'm still have runners in because the SUI and Bitcoin move very similar, but I get better ratios for SUI. I don't have to bet as big on SUI position size wise, but anyway, we got this move up now, right? Especially on this double bottom. This is all happening with the system. This is not magic, right? Then we get this overshoot again, right? Like I said before, it's now this wide double top. It's testing this. It's also from this moment in time and that moment in time a bearish divergence. Now look at Bitcoin, right? And look at the alts. Bitcoin's moved down like almost an altcoin, right? Especially relative to Ethereum recently, right? We broke down it. Now this broke a lot of data. I warned everyone not to trade today, right? Right before it broke down, like right as it's learning, like let's not trade. Look at this island pattern. It stopped me out last week. Don't even play around with the larger, like don't. I saw that island pattern last week, but it's like, oh, here's a little divergence. Let me get in for a long to the VWAP. Well, let's not get in on that. I mean, it's we don't know what it's going to do. Just stay out of it, right? Okay, so think about what's going to happen tomorrow, which is going to be happening in less than 4 hours now, between 4 and 3 hours. We had this now sharp reversal, which is a bearish engulfing pattern. It took out 1, 2, 3 days worth of data. It's very bearish, right? But at the same time, right, this is what's acted as resistance before and as support. I keep mentioning this high volume node here, right? It's different. Like before here, when this broke down, it's breaking out of a balance. That's a balance breakdown pattern on the short intermediate time frame. When that happened, I said only go short until it gets to, and I even drew the zone, a zone that can now shift the larger time frame buys back up to neutral to bullish, which it did, right? Here's the neutral part, then the bullish part, bam. Now, the same thing happened up here. I was bullish this entire time. The only thing I did that was slightly lazy that I went back and I went over my stat. I gave an amazing signal here, and I rode the runner up on SUI and Bitcoin all the way. Not Bitcoin as far, but that's what I basically did. One of the mistakes is I got out of Bitcoin too soon because I just didn't like how it looked, which was kind of a mistake. But one of the good things that I didn't do is I didn't like over trade on, when it was up here and get smashed down, right? And the other thing too, because I didn't have a Bitcoin runner in it, as this looked like it was about to break out, because it never feels like it's going to do what it's going to do. Like it didn't, like you don't feel like selling your awesome product when it's making this breakout pattern. I mean, technically, your candlestick pattern at this moment in time was a 1-2 bullish engulfing pattern. I mean, it technically didn't really I took out these 2 days, right? But if you zoom out, you realize now it's up into this area here. Where if I made it horizontal, it would be hitting right around here. It actually made a slightly new all-time high. No, everyone would just like, that's just counterintuitive. Like that's when you sell. Like just if you're having trouble doing it on your portfolio, flip around, invert the scale, and then just zoom out and just say, man, like it's been down for so much. Isn't that an amazing value buy? If I do my leg count, I mean, just imagine how many leg counts down this is. It's obviously, at least in that category, primed for some type of reversal. Even if you were a DCA guy, this is a huge, great move down to buy. I mean, why? You know what I mean? It's making this double bottom pattern here. This is all, and invert your CCI, you'll see blah, blah, blah on the other side, right? The divergence will be for the other side. And, that will help you psychologically sell. Now, I'm in a situation where, yeah, that possibly I should have took half off for these guys up here. Like even for Ethereum, I said because of the pattern in this bounce, which was different than Bitcoin, it had good odds to at least go 100% of this range. Now, what if you took profits here, which maybe I should have, like it made 100% of this move. And on top of that, 100% range principle, which I teach, that's mine. That's not anyone else's. And look at that. And then also it came up into here, which I drew the zone a little bit up here. And just think about it. Like this is a zone that launched a huge move down. Why wouldn't sellers be active there, right? One of the reasons I said that there's a possibility this would not be as bloody as Bitcoin's, which in absolute sense it is, but in relative sense, it hasn't even took out 2 days, only 1 day, and this has taken out more days. But one of the things that I mentioned is that, those two things, like let's say you did sell here, you might actually say, oh man, see, I should have sold up here, but actually now today it's below it. It's not about getting it right when you sell. It's about taking profits at the correct time. Now, I guess maybe I was, here when I took profits right on this triple top, it just seemed like the right, here and reloaded, right, and then made this move. I'm watching now what to do up here. I might be just, taking half off again and seeing how. I mean, rather than sit down here and having it come down to this zone and then reloading again long, what am I risking by taking half off? Which I'm going to be doing it. I'm not going to be doing it on the call because I want to clear mine. But towards the end of the day, I'm going to evaluate. I may be giving a signal for Bitcoin portfolio, SUI portfolio, Ethereum portfolio. Same thing I did last time. I'm keeping the other shit coins on, whatever. You know what I'm saying? None of those are near any kind of like they're either like I'm not going to tell you guys to take half off on dot. Like it's that's for those. It's near 4. It got to 56. Just DCA. That's what I'm doing for those shit coins, smaller coins. And I think dot actually, if you want moves like that, like where you can get it to like a 3, 4, 5x from here, like don't even think like, oh, well, dot is got it to 56 and now it's at 4. I'm going to get way more than that. Like just probably got to take profits along the way. Maybe it doesn't get there. Maybe there's so many things that can happen like in your portfolio of diversity, right? Some of your coins are going to go to zero. That's firm specific risk. I never thought it would happen to me. You never think it's going to happen to you because you quote research good ones. It did happen to me. Okay, I'm dealing with it now. So what I'm trying to say is that anything can happen in the wild, wild west, but what we can do is there's only 2 things we can do to this that we have control of. 1, our risk, right? And 2, like how we perceive it. And that is it. If you can just humble yourself and agree to that, you'll be better than everybody. What will give you an edge over everybody is everybody would have already quit because it's too painful already. And that pain that you feel, that's part of your learning process. If you can actually flip that into an edge, then you'll be able to do things quicker. One of the things that people don't do that will make them way better is they don't want to look at themselves. I bet you I might have one consistent PPT member that uses that stat sheet that I created for everybody. That stat sheet has been honed for years to the point where even a master trader who used to trade alongside us here uses that sheet now. And I bet you only one guy consistently uses it. Hell, I've been guilty of not even wanting to fill it out, and I hire someone to do it for me sometimes. I don't do that anymore. Me filling it out right away, slowing down, doing this stupid journal. I hate to say it, like this is just the part of me that doesn't like doing that. Because I'm not that type. I don't like just filling data myself. I'm telling you, that will be a game changer for you. It'll catch your little habits that you do where you shouldn't, but if you wrote about something you did last week, like I wrote about that island pattern where I took a small loss last week. This week, when the same more pronounced island pattern happened, I had absolutely zero inclination to sit around at the computer, watch it hit the low of the day, and then find a divergence on a lower time frame and take a little pop. Because the first one worked out, little quad exit. The other one got stopped at a break even. Then it came down again, and then the second one didn't. So it's like, why play with fire? You know what I mean? What it's made me a profitable week is actually doing nothing and being more patient with my runners targets where I gave a really good signal. I think it was like last Tuesday or something, where it's like just when it's a little risky at these higher time frame major resistance zones, where stuff can get. Everyone thinks like it's either going to be a breakout or a false breakout. Yeah, but in between, you could do this really sideways chop, which will destroy lower time frame traders. Just reduce your trade frequency. I had to, I had to give a reload and then also start on the lower time frames to also day trade for income because there was a major reversal at that point where I gave the signals. But now everything in between is a little riskier, so it's like just hold those runners in, and doing that made sense. And then just having the courage, like yesterday's runner that I took half off of a runner. Like even if you can hold a runner doesn't mean like you just hold it indefinitely. Like have a logical target too. And what are these logical targets based off? It's just based on basically these key patterns and like your horizontal support and resistance zones that I show you based on those key reference areas, the high volume nodes, the buying and selling tails, the highs and lows of range extremes. I mean, one of the best short setups, if you can stay up late for it, is like, let's say we've been going sideways, Bitcoin's been bullish, and now it's like just going sideways for like 3, 4 days, even a week. It's like it's having trouble breaking out, and then it gets exhausted up. You just like a short that. It starts to get exhausted. The shorts work out so nice. I had like a 2-week winning streak when I switched the larger time frame buys from bullish to neutral, where I was open to shorting again. And the short sides work out quicker. And then you have to think in terms of multiple time frames. So now you can, when you shift it back bullish, then we don't short anymore. So it's like, what would we do now when we look at it? right? Sometimes we just do absolutely nothing. Like this was a great day to do nothing. I'm not saying we had to step in and be the guys that are, have the guts to short this set. What time did this actually start to go down? I mean, people say, well, in hindsight, you could go back and say, well, why didn't I capture this move? Why didn't you short there? You told everyone to sell out the portfolio. Why didn't you short? Everyone, I'm just saying, like, you will always go back if you choose to have that inner critic honored, and you will always have the inner critic make you think you're an idiot because the inner critic is always succumbing to its own hindsight bias. Everyone's a genius after the fact, guys. Okay. You're only making a decision with the information that you had currently back then. So you shouldn't judge yourself too harshly with the information that you have now, which is totally different. For example, a lot of times shorts happen when I'm asleep. It's just that's when people get bearish in the overnight session. Like, look at this. This was at uh my time 30 minutes after 8. So 8:30. And believe it or not, I get up at 3 a.m. So yeah, I'm asleep at 8. I'm getting ready for bed. Like I don't really want to go into a performance state. You know what I mean? And then also like shorting blue sky. There's no. I was aware that if because of that giant wide double top, that I was going to watch how this closed. If we were going to get, remember I said yesterday, like if we get some type of sharp sell off, that is a really strong indicator that like this is a major resistance zone and we could go reverse our bias now from a larger time frame perspective. Now, when I say larger time frame bias, I don't mean the big picture bias. Remember, the larger time frame bias is a synthesis of big picture, intermediate, and short term. If you really want to study multiple time frame analysis, which you could even read about it on Investopedia, but you're not going to get it as good as you're going to get it here. You should add multiple time frame analysis, I believe, to your daily call sheet, and then the synthesis of the time frame alignment, whether it's short intermediate aligned or big picture and intermediate aligned, or you could have all three, but whatever, you don't need all three. When I say aligned, I mean either all bullish or all bearish, or they can be neutral where you're uncertain and then the lower time frame setups then become a little bit more important, like a divergence or exhaustion. But when you have alignment one way or the other, then you want to go with that. It's like that's why the daily call setups would be sideways up or sideways down only, because it's like do not short, do not long is the setups for those. So we didn't like at this point, like the larger time frame is up until when? Like we're open as it comes up to here. The like up here, the larger time frame bias was neutral. I gave a daily. I think I did the one the day of this. Now, right, neutral means I'm uncertain as to who's in control, but I'm open to it shifting to bearish. Right, like I'm open to because it's been bullish lately. Like here's the bias has been up. Bam. Right now we got that bearish engulfing pattern. We have to seriously watch this because like this, if this breaks, right, then we're potentially going to have at the very least retest this and have just a wider balance trading range, right? We could do something. All right. So and I was actually envisioning that because that would make sense. And then let's just say that does happen. Let's say it goes to October because I'm going to go to a weekly time cycle chart that Kobe decoded October. I think it's 25th, right? I mean, is that unreasonable? Let's see what this looks like. Okay, so it's not that. I mean, it's so if like I said, if it doesn't break out, then I'm going to use that as a target or an exit, right? If it does, I was going to use it as if this broke out instead of go down, you could use that as that October. This would be an exit up here. Now that this broke down, maybe this thing now gets a little bit even up. Shit, if this breaks, this fractal break, just saying real talk. Let's say this breaks sooner. I'm not saying that it would take it to February. I'm saying if it did bounce and then broke 100% of the range it broke from, so we'll just do something like that. It'd take us to that. That would be a really good long because you'd have a giant high volume node here. I don't want to see that, but that would be like around 100K. I'm just saying that's my worst case scenario. I really am so far. I'm not saying that this thing is Godspeed, this time cycle chart, but it's previous behavior influences future behavior. I got to use some type of data point as a larger time. Like this is like my week. If on your daily call setup, this is your weekly chart. category. Like even my predilection for this is going to be put into a relativity scale with that probability calculation scale. It's your daily call setups, right? That's all your categories because I don't want to overvalue one thing only. That being said, sometimes things are going to be overvalued because it's major, right? Then it gets a ×2 weight. If you're at a major support or resistance zone or a major resistance zone, multiply it ×2. Hell, you can multiply ×3. And then you could add real-time categories that you can't have on your daily call sheet, like sustained momentum, intraday bias, so on, because they also can get ×2. If it's like really heavy momentum, then don't go long at that zone, for example. Like that's because the momentum gets ×2. Then the bias gets 1, it's 3. Trade look, if it's just a normal zone, then it's only a 1-star zone, then it's 3 versus 1. If the larger time frame bias is neutral, then it doesn't affect either side, right? If it was bullish, then you would get 2 versus 2, then you might still consider it, but you might still want to wait for some exhaustion because the zone, if it's setting up to be an intraday trend day, then still don't go against the trend. These are the things we have to think in terms of multiple time frames because like it might be bearish today, intraday bias, but the short-term bias, the last 4 days might be neutral, sideways. No one's in control. We don't. Then the intermediate term might be bearish because it was like a balanced breakdown pattern over the last 2 weeks. But then it's like right near a balanced breakout pattern of the last 4 months. So then it becomes bullish if it gets down there. So it's like, what time frame are we actually going to look at? Big picture, intermediate, short term, and intraday bias, and how those 4 interact. Like intraday bias gets its own weight. That's a real time weight you would add to your daily call. And then the other time frames is how I've been actually really good at actually calling these turning points that investors might actually be interested in. Like the member who called me about his portfolio because he was heavy in stocks that a lot of them were across the S&P 500. So I was like, hey, I do trade that. A lot of investors think it's because I'm a day trader, and I'm proud of that. It's like I think that's the hardest time frame. It's like if you look at the doctorhood, being an investor is like being a baby doctor, and being a day trader is like you graduated to a neurosurgeon. But they don't understand, like, all that dirty lower time frame stuff. It's like, well, no, we're not like doing 1 or 5 minute setups. We're not HTF scalpers. Not that you can't make money that way. It's just we're not algo. We're not doing. I don't know how to do that. That's not what I do. But I think there is, if you look at even from a day time frame, there's maybe 1 or 2 good high probability setups a day. Like you're trying to find an intraday swing. You're not trying to find every little small time frame. Oh, in this 10 minutes, I think it's going to do that. No, I want to know who's in control of the day, and then I want to get on top of it. If I don't have a good odds, I'm going to stay out of it, like today, where there was like a lot of time frames up, but we know we were at that major resistance zone where things could get really bearish for us today. But obviously to step in and just short that, you have to like stay up and be really fun. I'm not even saying that. Just be aware of that, right? That takes a lot of energy. Like I wouldn't mind you just taking profits there. I'm still I took profits on my SUI yesterday at round 4. Now, did it go past 4 or something? Yeah. I did. Like if you look at it, it was around 4. 4 was it 4? 4 was here. Right? Like so that looks like it sucks. If you judge yourself at near midnight, it already went up. Like, oh my God, I could have made way more money if I didn't just take half my runner offer. What if I just took half off? Hell, what if I went all in? You know what I mean? Like that's a hindsight bias. Yeah, okay, maybe if you go back and zoom out and you honor your original targets from a larger time frame, like daily chart, and you go back and yeah, you know what? I switched a lot of them based on fear. Then that's real back testing. That's something you need to address and change. I personally have that problem as well. Everybody does. You get half off too soon sometimes. But at the same time, don't come in with hindsight bias and judge yourself because you didn't call the ultimate top. That's how people end up holding bags for 4 to 5 to 6 years or forever. Okay. You're never, ever going to call the exact top ever. That's just there's no perfect in this game. Getting half off around 4 is pretty damn good today, isn't it, guys? You know what I mean? I'm really happy I did that today. Boom. Last night you might have said, oh my God, or you could wake up and say, I should have shorted that shit. Why didn't I go all out? I didn't know. I was asleep. Like that's what I'm giving you these 2 little voices. I'm honoring out loud for everyone. That's what you guys all go through when you guys trade. That's your inner critic versus your inner coach. Always go to your inner coach and slap it, because the inner critic doesn't understand probabilities in long terms, and it gets really jaded by hindsight bias, which is a mental obstacle to trading success. That's actually one obstacle, is hindsight bias, which is a post judgment, right? Hindsight bias, you're just judging yourself harshly now with information that you have now that you did not have then. That's not good. Your own bias right there, right? That's a psychological bias. When I'm talking about technical bias, like time frame bias, like larger time frame bias defined there is who's in control. But if you think about it, if I'm talking about psychological bias as well, I'm talking about who's in control, your inner critic or your inner coach. Same thing. So that you have to actually come, Carl Jung used to really talk a lot out loud to himself and have a lot of voices. I used to get criticized a lot by people like, why are you always talking to yourself? I'm like, yeah, well, you should too. Yeah. Some people actually don't even have an inner voice. I didn't know that. Traders do. So actually use it so you can stop your behavior. Notice today I left, I did things. I went to the gym. I got my car washed and stuff. Like I went out and did things because today was a day where I did not need to be at the screen. If I stayed at the screen, like the last time I saw an island reversal pattern, which is basically like, like that principle, never fade a V on the other side. Well, an island pattern is just like an upside down V. It's like a cone. It's a TP. It's like, I'm not going to go long there then, because it's, I'm not saying short the low of the day either. Like, because you have a pattern that says it's going to break down doesn't mean you have a low risk short setup. And the same is on the upside as well. So that means you do nothing, because not trading is not trading. I put up the sign and I walk away. When I put up the sign, that's like, woohoo, there's still some new stuff and you could fill in your stats. I'm technically all filled up with my stats. And there was a little, guy was like, well, you did take, half off on your run, or you should update that SUI trade. I'm like, nah, let me close it and then I will. Like, that's how updated I am. Even on the psychological side, like, ask yourself, are you filling out the psychological side of the trade too on your journal? If you're not doing that, then you're not actually going to have a really key to improving. And I'm telling you, I created this, guys, and I sometimes went months without filling out the psychological side. I'm just telling you too. And I'm telling you right now, when I made a pledge to do that, because I make certain pledges in trading, like, I have a super performance morning routine that I wrote down for you guys. I pledged one day to do that 30 days in a row. I did like 32 to program my subconscious mind, because it takes about 30 days to program a habit. I did that. Like, you have to set these goals. Like, since I set the goal to really honor the stat sheet, which is the thing in trading, believe it or not, like, everyone has a caveat. My thing in trading that I hate the most is not even like losing a lot of money. It's actually filling out stats. I know it's stupid. I created the sheet. I tell everyone you have to do it. There's something about why? Because I used to not do it all the time. And then when I did it, it was like a week's worth of data I'm filling in and going, but doing it right away, you just have to do it. Discipline is doing the thing you have to do and doing it even like you love it, right? And that is the thing that you just have to do to improve. I'm telling you, just fill out both sides of the stats, the psych side too, and you will start to see those patterns that you will start, like the person that's supposed to catch your bad trading habit is going to be much more stronger and honored if you actually psychologically concretize with that journal, like, what could I improve on? Well, on that next time I see an island pattern, I'm going to identify it. Well, that's what I did today. You know what I mean? Because I wrote it out last time I did it. And I'm telling you, there's so much going on in the world, you will forget the mistakes that you do, and you will say, well, shit, I took a small loss the other day. Like, it was less than point, I don't know, it was very, very small, because it wasn't a full, I just knew to get out. Cut your losses quickly. It's like 0.01%, and I made 6 or 7% that week. That's good, right? And that's because I'm also constantly conditioning. Like, the first thing I listen to in my trader tapes is risk management, because I've been conditioning the small losses equal trading success. Not, oh, I have a position on and I'm going to just hold 3 months and it moved down 30-40% on me, but I got lucky and now it's up 100%. I've done enough of that shit with the portfolio, right? We're done with that stuff, right? Just build on your strategy and you'll get better with this more. I mean, technically what we're doing as day traders, which also then can morph into a swing trade like I did with SUI, is way more risk averse than what a huddler does. Even though a huddler thinks that what we're doing is way more risky. Yeah, okay. Like if you're some gambler, you might get stopped out 50 times in a row in the course of a week. I have a guy that I was trying to help who was in PPT. I'm not going to say what he not for very long, but he's a funded or not funded yet, but he's in talks with prop firms. You know how they try to get people on with those courses that they sell, some of them. And he's like, "Oh, this day, I only had 90 trades." I'm like, 90 trades in one day, dude. There's not even 90 setups in a week. There's not 90 setups in a month. What are you doing? And you know what I mean? Like that's why investors like what we do, because we are always trying to be with what the larger time frame is doing. Well, that's why I was able to use the same techniques that we use to help everyone with the S&P on that triple top. I forget in February or whatever, right? And now I have to use that today, right, and decide like should I exit some of this, right? Um, you might say, well, why didn't you initially just go take off half here? I mean, I wouldn't have faulted you if you did. I said that, but like I said I was willing to see how like this day played out, and maybe even tomorrow or whatever, because like even let's just say like we get a flash crash, this fractal gets like this zone that we broke, right? Psychologically, I explained this in social market terms. This is a triple top, right? I told people to take half off, move your stop, break even in your portfolio. Then we told people to go long and reload their portfolio. And then we held even if I told people to get off here, that's a great trade, guys. I just made everyone a lot of money there. We can do that. I'm watching it. Now, I personally just didn't want to take off into here, anywhere in this zone. Even if you do this now around this zone or anywhere in it, great. You're following correct process. You can take half off again. I'm just simply watching it now a little bit because I know that this is now going to be support. This broken psychological resistance is a huge pattern. I mean, what really is it? It's a balance. I'll just call it what it is from here. It's a balance because bounce, 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 breakout, balance, bottom, trading range low extreme, range low extreme, where this is like a selling tail, range low extreme. This is also an inverse head and shoulders, which was in April 10th. Boom, boom. Right. This is when the intermediate time, this is when the larger time frame, when it goes up here, larger time frame price breaks this. Larger time frame bias is now bearish, especially when it comes up into here. You're thinking short, where things now could go all the way down here. And that's every time there went to a good resistance zone, when the larger time frame bias shifts to bearish. Up here, when it comes up here, you're thinking neutral. That's fair because it's been strong. You can't just say bearish. You can short there because based on a ×2 magnification and a price pattern, but larger time frame bias would still be neutral, 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 neutral until it breaks the structure bearish, 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 bearish. And then, when it breaks this reversal, neutral, bullish. Now up here, neutral to potentially even bearish, unless we get a bounce breakout. But, or then it's this giant bounce breakout, right? See how now we have a new fractal? It's like that Russian doll. You keep pulling them out. And it's just, the markets are fractal in nature. Pop, 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 and then they can put them back on. And that's the fractal nature of markets because it's representing two phases: sideways, which is price agreement, which is the main purpose of markets, and directionality, which is the other phase of markets, which happens less frequently and less, shorter amount of time as well. That's price rejection, right? If this does break, now we have this going to act as support. Let's go back to that. But still, right? We have to like on first test up here. This is such a strong area, right? But just because I did that last time, now if it did that, it's going to be testing this thing that didn't exist before. So like, there's also major resistance. That's your support resistance category. And then what I think you guys should add to, your daily call is bigger picture patterns. So you might say, well, why would I need to do that? Because if it came back here, wouldn't this now be the dominant support? Yes. But also having a category of a bigger picture pattern, you'd also be like, oh, wow, that adds another way. Like that's just as a thought, right? And just showing you how this could work and how the template that I sent you guys with 12 categories is plenty to start. I used that. I stopped what I was doing, which I've added to it again. When I first started working on this year, like 8 years ago. But you can add things to it because everyone comes from a different background in a scale. If a tool is useful, use it. If a tool is not useful, don't use it. I could add different tools again and learn new things. But if something's working. Well, why am I going to make it more complicated? I want basically enough tools to get a good opinion of the market to then distill it down into an executionable strategy so that my reptilian brain can just press buttons. Well, the heart rate's elevated because that, and then have the emotional fortitude, right, to sit through all these smaller time frame things. Sometimes you set it and forget it. You could back off a little bit, right? If you revenge trade, make a rule. I take one loss and I'm out unless I give a note ahead of time that the market context is such that, for example, let's just say that we're at a major support zone. We know we're 8 legs counts down where this could actually turn really bullish now. I might even at this major support zone that we're now exhausted into consider momentum setups like an intraday balance breakout setups because my bias now, larger time frame bias, went from neutral to bullish. I mean, went from bearish to neutral with the idea that it could get bullish. That's new, you know what I mean? And then so that's when you can start getting really aggressive. So like that, this tempers your, and then you can kind of know when to back off. Like when we've made a lot of headway at these areas, right? Because shorting this tough, right? It's tough, even though we knew that like we sell on strength, but we know we can at least back off and not get involved in this because we know like, oh, this can get really bearish. So we don't have to like this idea that you have to catch every single move. That's not coming from a place of abundance, and it's not realistic. It's just not. What makes us superior to algos is also what can limit the opportunities because we're just one person. So you have to like, okay, when I scan during these hours, I'm on. If a move happens when I'm off during sleeping hours or during whatever, then I'm okay with that. You have to like strengthen that inner coach who's supportive. It doesn't mean that that inner coach isn't critical, right? But it's constructive criticism. It's like we're going to identify this problem so that we can change it, man. That's the different tone rather than you suck, dude. Like, what the fuck are you keep fading island patterns for? You told people on one call not to take this trade when you take a loss, and then you revenge traded 3 more trades. Like, what are you doing? That's not helpful because that will actually make you happen again. So, like, you have to just what do? You have to strengthen the psychological resolve that catches yourself when you fly off the feeling good emotional guidance scale, and it becomes more aware through the observer effect of when you're feeling bad. So it's like I'm always in tune with this emotional guidance scale, which is also highly connected to my thoughts. So I'm very observant of my thoughts and emotions, almost from a not almost, but actually while I'm trading as a performance state from a non-judgmental point of view, because I'm going to observe these things and I'm going to say, okay, well, that's a negative emotion. That was a negative thought, but I'm not going to let those things, here comes the NLP thought come in, lead to bad trading behavior. You have to just be like, okay, well, I don't care about, I'm going to do all these things ahead of time to calibrate my psychology for performance, which is a totally different, like when you're scanning to trade, that's a different state. If you ever watch that movie Over the Top with Sylvester Stallone when he flips the switch and he turns his hat backwards, that's what you have to do when you trade. So sometimes you have to calibrate yourself and say, hey man, I know there might be opportunities today, but why can't I trade today? Like check in. And actually one time Kobe said, this was like 5-6 years ago, he's like, that's it's not a coincidence that you're not there for the turning points, because if you're not a great short trader and we're going to switch timeframes to the intermediate term downtrend and you just faded it 5 or 6 days in a row and took those losses, are you really going to have the balls to really be there to do it at the right zone? Whereas if you just cultivated patience and just hung the sign on the door, hey man, not trading is trading, I'm sidelining today. Like one of the things that can lead to you being a better trader overall, because like a lot of people come to me and say, "Wow, I don't know how to short." Blah, blah, blah. I'm like, "Well, have you just tried going long and then not losing it all back first? Like, just work on finding these good longs and then knowing when it's going to get not longish and then backing off, and then you have control over yourself. Then you could say, "Oh wow, later on, I'm going to share a document on initiative and supportive activity and a really classic short setup that's really easy to do." It's like, once we, responsible, it's like responsive selling. Like it could be really like, I'll give you an example. Why did I make a killing this? No huddler made any money this week. After this broke up here, and I said bigger picture balance breakout, I'm switching all time frames up. Once I saw this selling tail, right? And you know what I mean? Like we went 100% of this range here that we broke from. That's why I had this rectangle. Almost like in that context, now I'm thinking, oh wow, okay. This could go sideways to down now for weeks. Like this, like see how I shifted, and then I started shorting it. And one of the easiest setups. I'm not saying I did it right away. You don't, even though this tail says you could. I saw how many times we just like, oh my god, oh my god, oh my god. This doesn't look like much. This is a lot. Are you kidding, guys? Look how much percentage this is for day traders. I was killing it that week. Boom, boom, boom. And then, I got out of a runner too much. But imagine if I followed my quad exit. Look at that. Boom, 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 boom. I got all the way down. I would have crushed. And I'm telling you right now, it's easy. These happen. You can't see it, but the shorts happen quicker, which is easier on your emotions. Because when you put on capital and you're risking stuff, like your stress hormones go up. However, when you're trading from a place of abundance and you're in control, and you can see like how I've been in control with reducing my trade frequency, but also increasing my trade frequency, like to get in on this turning point. And now we just have runners. I'm very relaxed with these runners. So one of the things that I said that I could do better is that, now that I have this runners in, and I'm coming from this place of abundance, right? Right, because let's see, Bitcoin. That was the signal. I mean, that's beautiful, right? The yellow zone was a major zone on the daily. That was that giant support zone. So even if this gets down here again, I'm going to go automatically long, unless I'm seeing some crazy like momentum, right? Then we'll talk about that. I give the signals live. I'm not just a coach that just talks about a system that you see can work in hindsight. There was a time I used to talk about these things just not on a professional level, but just here and there. And I wouldn't give signals live because I'm not, if I'm doing it just for free, just for fun once in a while. And I would show a chart like this. And people would say, hey, man, that's days or hours ahead of time. What are you doing? I'm like, I'm not going to take the risk and give a signal out in the channel. That adds to my stress level. But now with this professional channel, which I've been doing for years, I do give those signals. And not many teachers do that. They do not give their signals live. They don't drop their fucking pants. But I do, because this stuff works. You can even see, like, I didn't even update these zones. I had no zone in between here because it worked. Because I imagined itself once this broke with momentum, especially if it was early in the day or whatever, then it's breaking this key zone, which had confluence. I shorted this zone so many times. The only thing I did I made a fortune this week on the short side, except I didn't hold a runner down to here, which I was pissed. But then I backed off, and like, the old me that would have missed it, if I got out of a runner, would have then started going long, long, long. But I knew, like, once we went down here heavy and we didn't bottom and we broke below this key zone, right, just back off. And I just didn't, take long hits. I'm not saying you had to short that, but I knew that, like, every time we broke up there, these zones work really well. This one was another confluence zone, but you'd have to zoom out on the daily to see it. I think I actually created it from the daily and then just made it yellow. But this double bottom worked really well. And then you switch your bias, and now you're just going to go long. I've held a runner all the way up here until I got out of fear. But one of the things I could have done better is that when I knew the bias switched from neutral, then to bearish, and then to neutral to bullish again, which I called in real time. And I held the runner, which is great. I took off half here. That was bad. I'm not saying that even in hindsight. That's a rule. When you are fading a major zone, you have to have farther out targets. I got that out. I think I was thinking, like, well, shit, man, what if this comes back down here again? Well, here's the rule. When you have a major zone, which I'll make yellow sometimes or whatever, just walk away and then have an alarm on your stop. If you get stopped out, then you maybe want to go long again, but keep everything in there. Like, just sit through the uncomfortability of it. It's okay. I mean, I could have technically bought up here. That's what the rule is. Like, that's how more aggressive you need to be at a major zone, right? This was a zone where the big picture bias was going to override this shorter term balance breakdown pattern, right? This was a multi-week balance breakdown pattern, which in isolation, you should really take that seriously. But if you zoomed out and realized that this was let's really do that, like multi-month, year, whatever thing here, that this looks like nothing. This is like This looks like a speck on this giant pattern. So really bigger picture pattern, multiple time frame analysis. The pattern would switch it. We got a great move up there. So yeah, going back to what I could have done better, it just trade frequency. Like when you get bullish, when the larger time frame buy switches to bullish, which it did after going, like it was bearish, then I knew it could be neutral. Then with the idea that it could get bullish again, and it did. That means I can go long on pretty much every support zone or double bottom almost. So not only am I holding like this runner, which I did, and I could have not taken half off here. I took off 25 here, and I think I held something. I wouldn't have faulted myself if I took off half here, even though this could have broke, but this was the first resistance zone, and that is your first target, and it did have some confluence. That would have been fine. Here's a VWAP. When you have major support, you can boom, right? Boom, it got there, right? That would have been okay because then this would have sucked holding through it, but then another 25, and then your final target up here, that would have been fine. I don't even care if I miss some of this shit. You know what I mean? Because the idea is that after the time frame alignment switches, you can go long again on every support. So I didn't even have to switch these zones. Look at this. This broke. This was my resistance. Then it held. Now, why didn't I take these? Because I had a runner in, and I was just like kind of emotional capital. I remember here, I was like, Matt, I got two positions on. Why don't I take this? I'm like, I got runners in them. I don't want to feel stressed out or something. You know what I mean? And you look at it, and it's like, well, that's a great trade, not even in hindsight. Broken support, acting as resistance. You have time frame alignment. Literally, the system says I had to reload there, but that's okay because, execution wise, things are going to be a little different. Like, what time was this? This was 12:45. I don't fault myself so much on this. Was a trend day, but a pullback continuation setup into this. That was also oh yeah, I remember what happened on that. I told myself I was going to take it. I was really patient, and then I stepped away for a minute, and I missed the buying tail, and I was like, oh man, I could have bought up here, but it was like, oh. And then what happened here on this day? I can't remember why I didn't take it on that. I'm just going back in time, like why I didn't keep reloading on these. Like here's a day when I took off half here, I said, Matt, here's a wide double bottom. Why don't I reload on I'm sorry, here? Because this was at 9:30 in the morning. I almost did. And I watched myself just like not take it when my system said, you have to buy it here with a stop below here. You have to. Why? Because it's in front of a major zone and it's a double bottom. You have to get aggressive. I'm not just saying that in hindsight. Those are all written rules in the system. It's just harder to execute it. But I had that runner in, so I still had some of an abundance mindset not to get cute and start shorting because I'm switching sideways up are my calls. Even here, this should have been a target area, but that probably was, because the idea is that I'm not looking to go short from a larger time frame perspective. I was just looking to go long off the zone. And that's the idea. And it makes some of the execution easier because I'm not trying to go short. And it worked out very well. Oop. Every side, look, fading the low of the day. That was, what day was this? Saturday? Oh yeah, okay. Maybe I wasn't trading that day execution wise. That's fine. Oh my God, Sunday, bro. This is what, Sunday, and then we have a huge move again. Just the time frame alignment stuff really works. It just for every so time frame alignment would be a weight against the shorting. And look how much, even though some of these zones worked, I mean, why? I'm not in this for a thrill. Like, okay, you say, well, Matt, what if I shorted around here? It was near your zone. I faded. You say to fade key reference zones on non-trending days. Yeah, but I want to go with the trend. This was trending up. I don't fade against the trend. Even if you could have scalped and got out some of this stuff here, like the dominant trend is up. I'd rather you bought a pullback and got this so you could catch a runner up. You know what I mean? Up to here. And I think I called this, was this today? Yeah, this was today. I'm telling you. It was today where I told, so this was at 9 something. Let's see, when did this happen? 9. When did I start telling people? I gave people a warning not to go long today. And I circled this. I said, hey guys, look at this island pattern. Don't take a double bottom or something because you see a divergence and just try to get some crap because you're just going to, you know what I mean? Like, why deal with it? And this was a day where I was like thinking to myself, man, we're even more extended. Like, I didn't even have a zone. Like, this is, we're even more extended into a zone. We had a false breakout out of a zone. Why don't I have a zone above here? Because it's blue sky. Now, when I do my zone adjust, will I have a zone here? Yeah, because now this is the new key reference area. This is the all-time high, right? So I'm not going to adjust this yet. But you could see now, like we didn't catch any of this. Like part of me is like, man, this is going to be bearish all day. Why don't you get in on the short side? I just have to pick and choose my battles, guys. Right? This was, warning people not to go long. I mean, still like shorting near the low of the day, like here, it's tough because who's to say a little buying tail that we couldn't have popped up to the VWAP, and then you know what I mean? It's just when do we want to short on that week long, 3 week long balance that I kept shorting and shorting and shorting. That's an easy setup because the sellers are getting exhausted. Doing these little momentum things, I'm telling you, because even if it went to the VWAP and then went all the way back down, it still would have been valid. But having a stop here and then a stop, I mean, that's a huge stop, guys. This is like 121. How I do my stop is I just quickly move, like, let's just say I have 121,981. I'd move the decimal place in my mind 2 places to the left. I get 12198. 1219. So like about 1,000 points, right? For 1%. And I try to do less than that. And sometimes when I can know I'm being proven wrong, I will get out really quickly, like I did the other day. You don't have to let it go to a full loss. At the same time, know how to differentiate that between not letting your zone fades work out because you can't stand the heat while it's going sideways. If you have good time frame alignment with a yellow zone, you should actually be really happy to go long and then just like walk away, but just like be aware that you have to go long again if like it stops you out and then it pops back into it again, something like that, because it's that important. That's when you can take. But other times when I've taken a loss, it's like, well, I'm trading against the downtrend just because it's of emotions. That's revenge trading. That's different. So plan out if you're going to take more than one loss on a zone and why you're doing it. Otherwise, the other day when I took that tiny loss, I got up and left. That was awesome. That's like empowering yourself. I know like I've been doing this for a while, a long time, and I teach it at the same time, but the way that I'm speaking about it, these are problems that happen to people even on Wall Street. Like like people that get into trading are already type A. They want to perform and they like get stuff done. Anyway, that need in trading, if you don't harness it in the right way, will kill you. Like some of the ways that I harness this for trading performance is like I do that psych routine. And then I know that representation is psychology. So like my environment around my office has to be really clean. Everything has to be decluttered. I put it in order, right? And there's like tapes. I'm listening to tapes. That's part of my routine. I'm getting my psyche prepared. I'm like that. Listen to the music before the game, kind of a thing. And part of me, like when I was younger at this, I wouldn't do those things because shit, I might be missing the market. Just turn on the damn computer. No, don't do that. Don't do it because don't let the computer and those fears, those FOMOs rule you in this game. You have to, even though we can go long and short every day, as day traders, think long term, just like investors. We have to be about the long term because the consistency of profitability in trading will happen over the long term, not the short term. The short term is completely luck or unlucky. The long term is not about luck, it's about skill. You have to make it about skill, and making it about skill requires you to have psychological dominance over the market in a sense that you don't let it control you because the market can do anything, the whims and such. You have control over the market because you're coming to it first and foremost as a rule with an optimal state of mind. And if you can't generate that prior, don't do it. And then obviously you have all your risk tools, your stops, your fixed percent risk model, where the max you can lose is 1.5% to 2%. I don't even have, those aren't even my max stops on any trade, guys. If you were at the yellow zone and you had a 2% wide stop, I would say, you know what? I don't even care. Because for some reason, let's say you had to go to work and you couldn't have a tighter stop where you had like, let's say you got in at the front of the zone, but then it's like a little bit into it. So you have like, you move it all the way to the back. I'll just show you. And you don't have the ability to daisy chain it. Like, let's just say you got in here. You'd obviously put your stop, below the low of the day here. But technically, if it breaks this and bought here, you're going to be at work. You're not going to buy here. Do you have a stop here again with a stop loss here? Do you have a stop here? Another one with an entry point with a stop here? Or are you just going to buy up here with a super fat wide stop loss? Well, only thing I can say is that if you're at work and you can't watch this, position size it correctly, like 113 to 462. If you put your stop below here, this is way more than 2%. So if you for some reason have to have a wide stop for whatever reason, you're like it's better to catch some of this than none of it because you're at work or something. Then let's just say this was like 4.5%, or let's just keep it easy. Let's make it 4. Then just reduce your position size by half to make it a 2% loss if you're wrong. That's it. I would hate for you to do a double bottom here and then put a stop here. Based on my system, that's incorrect process. It is. It's just like it's just too wide. But you can at least position size it so you're not going to violate your risk rule. What you'd really want to do for a couple of reasons is if you bought here, you're getting in because one, you're fading the low of the day. In the context, because we were at this major support zone, which gets times 2, a sideways up daily call, up here, sideways to up, stop here. If you get stopped out, buy again, put the stop below this. And then, of course, if you get into this zone, psychologically prepare yourself to buy again. That's your trade plan for the day. If you did that, and you didn't lose more than what you're allowed to lose based on your account, like if you have a $50,000 account, for example, you shouldn't lose more than $3,000 on any given day at all. That should be, you should cut yourself off. Right? Because what's 1% or 2%? 1% is 500, so 2% would be 1,000. Actually, I did that. Yeah, I wouldn't even lose more than 1,000 on that. But for 1,500 or something. But yeah, just make rules like that for yourself. So if I was because my trading account, I exited all my Bitcoin, which today actually is a great move, even though I didn't catch all the runner. And technically, I got in here, so technically, I still could even keep a runner in, but whatever. With the SUI trade, I have half of a runner on, which I'm fine with because my entry I think was a little bit higher than this. It was like on this breakout kind of. I didn't quite get it on the bottom. I have to go back and see, but it doesn't matter because I have like what's half of a runner. I might even have like half of a runner or something like that because I didn't do the math right. Or sometimes like just to hold it a little longer, I'll take off of a runner. That's what the quad exit allows. Like, have your targets, but it wasn't a bad idea to like only have on 12.5 or 6% or something today. That's it for my SUI trade. I think it would stop me out around 3.5 or something, which would take me here, around here. Not a great entry, but my Bitcoin entry and for the portfolio and SUI reloads was way on the money. I just got those big. They were just bigger sizes, so I got those in first. And I think I used a momentum setup, but still, that was a huge swing trade. That's going to be paying the bills for the next couple of weeks, so I got to take that out. But yeah, I mean, saving everyone from going long. Like when you see this much momentum, like I got to the market in the morning, like you see like around 6 a.m. or something. Yeah, it was before this. So I got to the market around 7 something. I had to see when I actually posted. That's what I obviously I got to the markets way sooner than that. What I mean by that is I get up at 3 to start the performance routine, the getting everything super clean. The OCD of the cleaning is also part of me trading, by the way, because that's part of my performance routine. Because like I'm doing activities, which then says to my subconscious, you see, he's getting stuff done. He doesn't have to go press buttons. You see what I'm doing? How I'm cultivating patience, and then you're exerting control over yourself, and then breathing, and then bam, you get to it. Start on the higher time frames and do another daily call again. Even though you want to do a daily call ideally before the day opens, I'm doing also another one before it opens again at 9:30 when the real markets open physically. I know it just things change at 9:30, and that's really when I'm on it in the morning. I don't trade in the overnight, so I'm usually asleep at the time I'm supposed to do a daily call. But today I took a little power nap, and I'll be able to stay up a little bit because I want to maybe make a decision on some portfolio things. Now, this isn't just some hopium. I'm just going to say like what is different. Let's just get this indicator out. Yeah, okay. And the other categories I've added that are real time to the daily call, pre-market stuff, is intraday bias and other markets. Like other markets would be a weight against any long as well. Like that's another reason I made that decision. Other categories that I've added to the daily call for pre-market stuff, the stuff you would do that has nothing to do with like, sustained momentum or intraday bias because that's real time stuff or volume or stuff like that. Is second is sorry, I'm just pre-market factors for a trend. Basically things that would increase the odds for a trend day. Now, my system actually does have, there is one thing that this isn't even in hindsight that increases the odds for a trend day. In this case, it'd be a downtrend day, but that's fine. Is that when you're at, when you're at a major resistance zone that's listed in the list, it's like 10 or 12 things. It's like, are we at a major support or resistance zone? Is there a bull bear zone? Do we have volatility contraction? Do we have a mature balance? Those are all defined and described. Do we have an generally elevated volatility environment with like, the average true range and the volume indicator and the relative volume? Do we have, what are some other ones? Are we coming off maybe not quite a major zone or resistance zone, or support resistance zone, but are we coming off maybe a bull bear zone? That's like a little bit like an intermediate 3-week thing. It's still something that can start a trend, right? So those are all. Do we have an inside day, right? Narrow range days. That's that volatility contraction. I listed them out. I'm just trying to think what are some of the other ones. Oh, do we have like do we have time frame alignment? Right. That's that larger time. Is a larger time frame bias bullish now? Um, you might now be shifting your larger time frame bias now to bearish because we got this sharp reaction off this major zone. But the reason why I pop this out is that there is a high volume node here, right? And you can see there's this moving average here. There we go. I don't want to give it like amazing whatever because this is from July 12th, but it is like about a month or so. We did go smack dab into it. At the same time, this is a very strong reversal off that is contextually correct. Look what happens here when you get these bearish engulfing patterns, right? Maybe a pop up, there's a double top. We're in some pain for a while, right? I'm not saying like I might be looking for a pop up tonight and then I might take half off the portfolio is what I'm kind of, we're closing very heavy. This isn't quite 8 o'clock yet. Right? We still have some time, but notice I'm bottom building. I have not adjusted these zones at all today, guys. If you guys aren't using zones in your trading, you really should because it doesn't mean every zone I would have to fade. It's like, first of all, I only fade zones on non-trending days. This day is anything but a non-trending day. It is clearly down trending. So we're not going to fade any of these zones just because I drew them. But you can see how they certainly can act as, I mean, resistance, support, support, support. And, what is this zone here? It's, just an area that has whatever. But I mean, note it, like, let's go back. Let's just do a beauty principle here for a second, right? Right? We get rid of this. Sharp reversal, at least, and it goes down at least into a zone that can potentially reverse the bias like this did temporarily. But the phase that it goes into next is that it makes at the very least a sideways, to down, right? Right. So I'm not looking to go long anytime soon here, right? Just because there's this new high volume node here. And it's bottom billing, right? What I'm trying to say is that, right, you fade the key reference zones on non-trending days, but you get on board the trend early on a trend day. Now, the great long entry, I'm trying to get a little bit more patient with the Bitcoin runner, but I'll tell you what, my SUI exits were on the money. I hit those pretty good. But we are still, right, with SUI dealing with this inverse head and shoulders. Don't discount it yet, right? Because yeah, we got to move down, but boom, and we got to move up. So this is built structure, shoulder, head, shoulder. It could go back and touch this part of the shoulder or whatever, and which is like a double bottom here. We'll see. There's a little high volume node here. Don't get involved here for reload. Like I said, I'm really watching here to decide whether, I should, this was a little bit of a risky play, right? To half off, go in for the portfolio. Not bad for a trade here, but why was this an obvious reload here? Well, especially on this double bottom, we had zero line reject coming from a major zone here. If you were really savvy with the system, right, you would have wanted to get in on this wide double bottom here because that's a launching point of directional conviction. But seeing the head, you understand there's a shoulder, there's a head, you're getting in as well. But yeah, 4 has been a psychological resistance zone like I've never seen here. But SUI has made really good movement, and this is still a bullish bigger picture pattern. So I mean, nothing is um, off the table yet. But you can see how, obviously my portfolio entries are way lower than this. So I have some room to watch how price responds here. I anticipated a reaction today. That's why I mentioned things can get pretty bearish for sellers. I said sellers can be active at these zones. I'm thinking in multiple time frames, but I'm also having a bigger picture pattern category because I was thinking, well, just because I hit here doesn't mean it has to go all the way down here because we have a bigger picture pattern that didn't exist before at those areas, and now I have to watch it. So from okay to observe this from a portfolio perspective, I was not okay to just observe this from a trader perspective because my entry price for the trade was much higher. I need to take profits to live off that too. You know what I mean? Different entry price, different criteria, but I'm still using like quad exits on both. I'm still using reward to risk and thinking in terms of expectancy on both my entries and my exits for both. Don't think for a second that your rules should change much on a quote buy and hold game. I think folks just use that to take way bigger risks to get rewards, and they can't handle small losses. But at the same time, I'm not discounting that time frame. We all know we can make a lot of money in the buy and hold game. So whatever you allocate for whatever capital, you just have to know what you have to do with it, what rules to play. But I'm just pointing out that the quad exit and risk management, thinking in terms of an expectancy on your entries and exits, has validity for both income producing shorter time frame trades and your investing time frames. Yeah, so I'm hoping this bigger picture pattern can hold us here for today. This would be a strong double bottom here. There is this zero line reject here, right? Right. When it came here, right, there was not an inverse head and shoulder. Now there is. So, there's also this high volume node here that didn't exist before. So we have to, just see what it's going to do. And like I said, this high volume node is roughly the same size as this one. So it's almost going to be this ping, 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 ping. I'm okay looking like letting the investment play out, but not the day trade. So the swing trade now. So that's something I'll give a signal on tonight or tomorrow, whether I take half off on that for the portfolio. I might just let that last little small runner go to get stopped out. I don't care. Man, Bitcoin is taking a real shit. No, that's Ethereum. I'm sorry. Yeah, Ethereum is getting a stronger. Look at the zone. The back of the zone has the best odds of the reaction. We're getting a strong move off. The reason why I'm saying it's taking shit is that for most of the day, it actually held pretty strong in here. And I was like, wow, this is relatively strong. But now it just got, hit it pretty weak here. But it has been relatively stronger than Bitcoin lately. Still, this is taking out 1, 2, 3 days worth of data in a straight line down move with not as much momentum, right? There isn't. You see, this is not a zero line reject in my opinion yet. There's not the blue turbo is not overshoot enough. Whereas in Ethereum, whereas in SUI, you get a more classic momentum zero line reject. I'd like to see that in Bitcoin, but I wouldn't be surprised, because lately what's been happening is that the higher beta nature of altcoins is showing. Like on days when Bitcoin's up, the alts are up a lot more. When it's down, they're down a lot more. So at least they're responsive to that. But yeah, obviously this is not what we wanted. But I'm, zooming out for us to have a bullish um, leg up now in the entire market, especially alts. is not necessarily, like I said, I did an analysis that usually like the last real big of alt season, which isn't really that long, um, happens 18 months after Bitcoin's halving, which would bring it to October. And like I said, not any one thing has to happen this time, that time. I mean, everything could have got delayed with the Trump bandwagon war scenario when he first took office and the market tanked. Um, but it's also in alignment with this Bitcoin time cycle chart, which takes us to Monday, October 20th of this year. And yeah, I hate to say it, but that's kind of what I was slightly afraid of, that we'd have a double top here coming back into this. And then we would, the end of summer of the doldrums, and then maybe an entry. But, this would just say it comes down to here, these move sideways. It kind of looks like this. Then, like, there's an entry. This is going to be an entry point for me, especially from a time. If this aligns with support resistance in a daily call and it's around this time, that would look at that. Boom. Look at that. Boom. Because what this time cycle really does, it doesn't just help with accuracy, but it also helps with opportunity cost, because I don't want my capital tied up very long. I mean, I was thinking about the $55,000 investment I made into LTO, which when the guy just rugged it on everybody. It's not just the 55,000, like the opportunity cost, or where I could have put that in some alts or things, or put it into more into maybe some SOL, or even more SUI at 80 cents. Like the opportunity cost is mind-boggling. So the Bitcoin time cycle chart really uh, doesn't tie up your money. Let's say you bought on a double bottom, and then the next week it's like, okay, a little bit of a dip here, whatever, but now it's not precisely on it, but like, who cares? It's the next week. And then you just bam. I mean, that's great. It's not tied up for 6 years, 6 weeks, 6 months. This is the next week. That's what we want. Here's right on the money. Bam. Here, it's like basically telling you, hey, man, we're going to inflect now potentially for some type of reversal or a trend. And we got the trend. Bounce, breakout, spot, retest at the time cycle. See how that was awesome? Whereas if you bought here, it's great from a trade location perspective, and you got action reaction. But if you're an investor, you now had to sit through all of this, because you're not probably going to take profits here, whatever. But look at this time cycle. Now it's a double bottom, and the time cycle gives you a bigger move off it, and you have your capital opportunity cost not tied up. I really like this chart. Kobe did this chart. But yeah, this is kind of what I was afraid of here. Also, if we just look at here, like we made a higher high, right? But did the CCI make a higher high? No. So bearish divergence on the momentum in the context of a double top, when it could be overextended into end of summer, where it's not in alignment with our time cycle chart. Little disappointing, and say at least. Yesterday was pretty fun to watch all these coins go up. Now there is one coin that I do own that I haven't really even talked about, because like I'm finding like, oh wait, there's old cycle. Excuse me, these old cycle coins. Yeah, and I've swapped out of a couple of them. Like I was really into this one for a while, XPR, not XRP, but XPR, and because of its banking connections to the meticulous network. But whatever I got out of it, put it into SUI. But this one I put $5,000 on back in the day, and it went to like $100. So I was like, oh, this, and then just not out of nothing, just out of curiosity, I just went on YouTube or whatever, and I typed in Lime, and just not all these coins have a presence like SUI. SUI's social media presence is outstanding, which is the narrative, and that's why I told people to start investing in it at 80 cents to $1. But Lime doesn't have that. The thing is, though, guys, is that some of these projects, obviously, most of them are going to go to zero. I think a lot of them are. There's going to be a .com, I think, like James Ultra says. But a lot of these projects that are going to succeed don't necessarily have to have a narrative if they have some type of banking connection for this integration that's about to happen. Not necessarily for the CBDCs, but like for the ability of people to off-ramp different cryptos. Banks are now going to have cryptos. Coins, I think they offer or whatever. But what I'm learning are also for the AI stuff. So Lime is not just some scam coin. They're going to be integrated into a lot of these apps from I forget. This is how much I'm a fundamentalist, but I guess I was more so impressed that it had actually a lot of business partnerships lined up where it didn't need a narrative to actually make money. Right. So and sure enough, like this is the only coin that's actually pumping right now that I own. And it's been at 46% the last 2 days. It's up like over 100% or close to that. 46%, 50% yesterday, and then today also 46, 50%, where everything else is down. And just, you don't, I have no reason why one does the other, but just I sold out of this one, but this is also another coin that is dirt cheap right now. I think I put 15 grand on it and I sold it at 5 grand. So I took a loss on it from last cycle, but I was thinking to myself, shit, man, that 55 grand I put on LTO, it got up to 36K a couple times, but I believed in the narrative. I was part of the Telegram group, always researching and reading what they're up to. It was all scams, guys. Like, I should have cashed out at 36K and put it into SUI, right? Or, put it more into my day trading account or took it out and just lived off it and went on a vacation. But, the greed. But at the same time, right, I got into that one because of the United Nations allegation, project partnership at the time, and a couple other exciting things about both public and private type stuff, the land grants and stuff. I heard a lot of it was exaggerated slash fabricated, but here's one that isn't because they have this connection with the Meticulous network, which if you look into that network, no one's talking about it, but they are connected to a lot of banks that are going to do this off ramp, on ramp thing. So that was that play. And sure enough, like, it was down to like $600 recently, but it's got back up to 5 grand. I said, well, that's good enough. I'll put it into SUI. That's a sure. At least I'll get that back. You know what I mean? And that's that prudence that you need to have for the investment side. What I'm talking about right now has nothing to do with, following a really good shorter term trade strategy. These are just investments. But sure enough, it has been one of the most bullish coins. Right. Recently. That's why I got some of it back. But I do not want to be in. I mean, if you think about it, right? If it doesn't, I just prepared myself to like, man, this thing could be that one coin that makes you super rich. You know what I mean? It's like I put a boatload into a micro cap that may get a bank, these big banking groups. Like last bull run, it got, pretty high, 10 cents, or at least a cent, 10 cents. And now it's at, wow, 6,000. So it's very, very, if it did get near the all-time highs, this would be an amazing run. Look into it. There's not a lot of press on it, but it has that banking connection to the Meticulous network. So I should say the Meticulous network has the banking ties, but XPR Proton is going to be the coin that runs that network. That's the play. So I sold it, but this is the one that I might have some regret on. I'm just looking at different alts and where we are. I mean, this is such a small ass coin that it doesn't even have a good looking liquidity chart. Toko is another one from the last bull run. This is when I was doing really well on a lot of coins. Instead of just like taking more profits, I just bought shit coins in Elon Trades Group. I put 28 grand on this coin called Tocoin. Another coin that I thought was going to go to zero, like LTO. I lost more in LTO, but apparently this is a same kind of play as the LTO thing, where it's like it's going to be like this micro cap that gets government contracts. Like that was the Netherlands version of it. This is the Indonesian version of it. And I guess there's some white guy I posted who created this coin. Another coin I thought was absolutely going to go to zero, but apparently there's some kind of partnership still there. I mean, it could be another LTO where the founder just scammed everybody with some talked some guy in government to say something and got a bunch of people to invest in it. This thing is also. I put 28 grand on it. I mean, it got I don't know what it is now, but the last time I checked, it was like $100. I'm just telling you, like, if it ever goes anywhere near what it did last time, like the amount of money you can make if you put $200 on it, is what I'm trying to say for some of these micro caps. But I'm just showing you some of the mistakes I made as an investor and trader last bull run with greed, when I didn't put like $100 on it, which I did. Wish I did. I was putting like huge amounts of money that I wish I really had right now. That would be really great to have the 28K, the 55K. I would take even 5K back in Lime. I'm sorry, Lime. I don't want to wait for you to recover too. You know what I mean? Like this is, but if this is, the opportunity, if we are going to have an alt season where we're at. And, this time though, around 5 years later, 4 years later, finding the right narrative and taking profits has been instrumental. Ondo is another one we just picked up. for the PPT portfolio. SUI at 80 cents was identified as the main narrative, and that's been super profitable for us for both our portfolio and trading it sometimes along with Bitcoin. It's been very profitable. Op is another one I put a decent amount on this year. 10 G's on this. I'm still holding this one. Like I said, I got into this whole thing because I saw how much, last bull run. What I saw is that there is this thing called alt season. I've been in two different bull runs that I observed since I've been in it for a good minute, where it starts to get so bullish that you think you don't even need TA that I teach anymore. Like there is like what am I doing? I could just go to sleep and just get rich. And you start just to give you an example, there's someone in the channel during a bull run. I'm giving you an example of these micro caps, what can happen where I lost a lot of money on them. But here's a guy that didn't lose a lot of money. He did it right. He put like $50 on a coin that went to $27,000. I saw that the whole year, right? I'm thinking, wow, like what if I just leveraged into these? And I leveraged a healthy six figures into them, thinking I was going to get, whatever the ratio is to 50 to 27,000, I stupidly was thinking I was going to get that similar to something at 100,000 and becoming a super rich evil billionaire. So, it was like some stupid. I have a book next to me that I have out that I can visually see called the Psychology of Risk, and I'm telling you, the things that you feel, the thoughts that'll come in when emotions are rising, when money's on the line, are some of the most hilarious things that'll make you do ridiculous things. I'm just going to grab the book because I pulled out a chapter of it here. Yeah. That's what I was doing last bull run in 2021 when I was betting all that money in that High Rollers channel, where you shouldn't bet like a lot of money on micro caps, is I was experiencing a breakdown. Even though I was super bull run euphoria, a breakdown doesn't happen just when you're losing money. A breakdown can also happen when you're making tons of money. So this is from the Psychology of Risk. I'm just going to read some of it now. It's called Recognizing a Breakdown. I guess this isn't a mental breakdown, but this could be also just momentum as well. But sustaining momentum, right, involves handling breakdowns or failures and approaching them as opportunities for more intense involvement in the experience of your trading. Yeah. What he means by sustaining momentum is sustaining your own trading momentum, right? If things have been moving along very well and then you suddenly slip from maximum performance, it may be due to a failure in concentration. You may have become bored, or you may have stopped following your strategy. That's what I did. I stopped following my strategy because euphoria kicked in. Additionally, you may have failed to continue to take responsibility for your actions. For a while, I was like, well, BitChick invited me in there. And then, Elon Trades, everyone thought was a trading god, where he showed like his initial bag of 10 grand and then he had like $1 million. So like every huddler in the world was freaking out. He's not a trading god. He's a dumb gambler. Okay. He doesn't tell you that he's lost that twice or whatever. Where was I? Failures in concentration so I have to take, what I'm trying to say is that I have to take responsibility. It wasn't his fault. It wasn't Big Chick's fault. I have to take responsibility for that action, because the failures in concentration may result from faltering in your commitment to your vision and slipping into automatic thinking. That's what I'm trying to stop with the conscious awareness of the inner critic and inner coach, supportive voice versus the critical voice, because you have to be able to override that automatic thinking to lead to automatic trading behavior. That's why you keep losing. And I'm just going to tell you, I'm not going to say who, but there's folks that are leaving soon because they just haven't been able to not stop their behavior. And if I ask them, are you filling out that sheet? Do you write in the journal? Do you follow the daily call? Do you add any of these things they like to? Well, they don't do it because what I think is that the reason why you don't fill out the sheet and observe it, no one wants to observe this because it's too painful why you do the things that you do. But that's how you shine the light on your own shadow, and then it doesn't become scary anymore. Right? So it says failures in concentration may result from faltering in your commitment to your vision and slipping into automatic thinking, self-justification, or denial. I know someone who's in the channel that is in denial about what they do. They do never take profits. They've held coins to below break even after they got a 28 or 30x and were rich for life. Below break even, guys. You may veer away from following your plan, find yourself unwilling to trust or empower others, or refuse to assume responsibility for a trade that goes awry. If you don't produce specific results, there is often a tendency to deny the facts and to avoid looking for a way to get back on track. When this happens, you can bolster your concentration by recommitting to your vision. Here it helps to think about what else is possible rather than function with preconceptions of immutable truths that box you in. Be alert to slippage of commitment when you sabotage yourself by listening to the doubts of others or when you distract yourself with unnecessary trades. Be willing to recommit to your goals and be ready to discuss what is necessary to make things happen. Don't blame others for your failures. When things aren't going well, don't give up or resign from your commitment if you fail to produce the result. Figure out what was missing in your trades and try to establish a procedure that will make your trades work better. Failure is part and parcel of all trades. Recognize that when it happens, it doesn't mean that there is something wrong with you. It simply means that you have not handled some of the specific issues vital to reaching your goal. In other words, failure simply means that you need to correct something. The key is to notice that you are no longer aligned with your goals. Goals and vision erode because people do not want to face breakdowns. In order to move on, you must be able to declare a breakdown and recognize when you are compromising and faltering so that you can correct your actions in the present and bring them in line with your strategy. And, that's going to come down to managing the emotions of breakdowns. And we're going to get into that on the next episode of Principal Profit Trader Coaching Call. All right, guys, I am calling it a day. See you guys in the room. Take care.